Hello, everyone, and welcome to another roller coaster ride as we get through COVID. Cathy Sabater, mortgage planner and proud veteran. Then and now, why is 2020 not like 2008? Should you buy or should you sell in 2020? Let's talk about 5 different ways. Number 1, to get a loan in the early 2000s, how easy was it, right? They had 100% financing, stated income. All you needed was a good credit score. You could breathe and you got a loan, right? Now, banks are a lot more conservative and the guidelines are there. Number 2, there was less housing inventory. As a matter of fact, right now we are under supply. Sellers and listing agents want to make sure that if you're a pre-approved buyer, right, that is from a reputable bank, because they want to make sure that the loan's going to close. Let's talk about 3, stable house appreciation. Years leading, right, before the market crash, it was out of control, right? But you're going to ask me, hey, Kat, what's going on? Which leads up to number 4. Yes, that's the case. The difference now is people are making offers over asking. The difference is when the appraisal comes in, easy math, $500,000 house, the appraisal comes in at $475,000. Who's going to make up that difference of $25,000, right? You are probably as a buyer, or you're going to renegotiate with the seller. That's the difference. In the early 2000s, the appraisals just kept coming in at higher and higher and higher and higher. That's why appraisers now are a little bit more conservative, because they want to make sure that just because someone's willing to pay more for the house doesn't mean that it's worth that value. And since a lot of values are coming in usually at the asking, if you're doing over asking, then you are then more than likely going to have to come in with the difference. Let me just show you a couple of charts that I have here so you can see what I was talking about. When we talk about steady appreciation, this is the last 6 years. This is years leading before the market crash. As you can see how volatile this was, and you can see how steady this is. Then when you talk about home equity cash out, 824 billion in 3 years, 247 in 3. That's conservative. So let's just talk really quickly about interest rates. Right now, we're awaiting the Fed minutes and the 10-year auction. Based on what happens, usually when the Fed speak, remember, when this goes down, interest rates go up. When this goes up, interest rates go down. So right now, we're continuing to get to this extra level of support. So based on a purchase, if you have to lock because you only have so much time, lock when you can. And then for refinance, we can continue to trend the market to see what's going to happen so you can get the rate that you want. Feel free to give me a call, 619-846-2675, and stay safe.